Welcome aboard the Pilot Money Guys podcast, where our mission is to help professional pilots build and protect wealth on their journey to financial freedom. This podcast is brought to you by Leading Edge Financial Planning.
Welcome to Flight 127, Pilot Money Guys. We've got a lot of stuff to talk about today, and you got us a great guest. You're going to give an intro to him in just a minute, Dr. Jim. So
that's right.
Incredible podcast today. But first, I'd like to welcome all of our professional pilot audience, pilots, interested spouses, all others that are interested in any kind of financial items in general, tailored to our professional pilot audience as well. So we appreciate that. Andy, our mission is to deliver actionable ideas, simplify the complex, and cut through financial noise, all to help you build a mindset for financial and life success.
Yeah.
What do you think, man?
That sounds great.
Sounds good. We do. In all seriousness, I mean, there's a lot of financial noise out there, and this is a good one to kind of cut through some of that stuff.
Yeah.
So you got us a good guest, Dr. Jim. Today we're going to talk about a plethora of things. That's a big word for me, but a plethora, cornucopia, if you will. We're going to touch on the Iran war. We're going to touch on inflation, the strength of the U.S. dollar, why it matters, the world reserve currency, China's impact, stablecoin, Bitcoin. What else?
Yeah. No, we did it all. We touched on all of it. And I think you're right. It's like everything is related. Price of oil, right, is related to global stability. Stablecoins are related to how much demand there are for U.S. treasuries, which impacts interest rates. So it might feel scattershot, but it wasn't. We were, it's just, again, everything touches everything. And Dr. Jim is, of course, incredibly smart, and he's able to kind of stitch and weave certainly better than I could.
Oh man, really intelligent guy. You're going to read his bio in a minute, but the beauty of it was he broke it down to where even I could understand it. We pilot proofed it, as we used to say, Andy.
That's right.
So really fascinating conversation. Reminds me of a flight from LA to Chicago where we just chatted the whole way and solved all the world's problems, or at least complained about them a bit. So
there you go.
Tell us about Dr. Jim, man. He's a neat guy.
Yeah, well, I'm excited to have him on. Number one, he was my investments professor when I was getting my master's at Georgetown. He's still a professor at Georgetown at the McDonough School of Business over in DC. But his specialization really is market structure and regulation. As he would say, that's the plumbing of the markets, the things you don't think about, right? When you send money on Venmo, or when you send money to your bank account, like how that actually works is incredibly important. And not just in the U.S., he's visited over 75 financial exchanges. He talks a little bit about that in the beginning. But his day job is he teaches undergrad MBA in fintechs and investments at Georgetown. He's testified before Congress about design of financial markets, and certainly has been quoted in lots of newspaper articles and on our podcast now. So he can add that to his list. But before he started teaching, he'd worked as a rate engineer at PG&E, so that's Pacific Gas, and Electric, as well as some other financial institutions. Been a visiting academic fellow at the National Association of Security Dealers, that's now FINRA, and as a visiting economist at the Shanghai Stock Exchange. He was chairman of the NASDAQ Economic Advisory Board, member of the OTC Bulletin Advisory Committee, and has served on the board of directors of Direct Edge Stock Exchange, later part of BATS. He was a visiting professor at the Wharton School of Business at University of Pennsylvania, 2012 to 2014. And then he also has 12 fintech patents, which we asked him about on the show as well. So super talented. He's a great teacher, and brings that into our podcast. So we were honored to have him with us on the podcast.
Yeah, it's awesome. Everybody's going to enjoy that. Please share the podcast. It's got some great information in there, and we'd really appreciate if you rate and review our podcast as well, wherever you listen to your podcast, so we can get that out to more people. And like I said, cut through the noise there. But please welcome any responses. You can also see this on YouTube as well. He has some visuals there for learning purposes that you might see on YouTube that you won't see on the podcast. So So again, thanks, Andy, for getting Dr. Jim for us, and we hope everyone enjoys the show.
Dr. Jim, thanks for joining us today. And we're excited to have you. We got a lot to talk about on today's podcast episode. We'll talk oil, energy. We'll talk, that might be in the news right now. Federal Reserve might be in the news. And we really want to talk about stable coins and Bitcoin and all sorts of good stuff. But before we jump into the meat of the matter, you've got a great aviation background with your family, and I know our pilot audience here will appreciate that. But I know you've got some good stories there.
Sure. Well, all my mother's husbands were pilots. Her first husband was shot down in World War II, but he was MIA. Yeah. And this was in the Pacific, and nobody knew what happened other than he was shot down. Wow. And so I grew up watching the Gilligan's Island TV show, which was about these castaways on a desert island. And I often thought, what if Maxwell Smith was discovered on a desert island somewhere? Who would my mother be married to then?
Yeah.
My father, also in World War II, flew anti-submarine sorties off of aircraft carriers and actually did manage to sink a German sub. Wow. And after he passed away, my mother, who kind of has a thing for pilots, married my stepfather, who was a test pilot in World War II. That his job was to test the dive bombers fresh off the assembly line to make sure they actually worked. Wow. And after the war, he got to test fly a Messerschmitt 262, one of the first jet fighters that we had captured.
Wow.
And my brother and my uncle spent their entire careers at Boeing. And so I've been raised with a lot of Boeing swag, including my very own Boeing brand seatbelt extension.
Nice. Oh,
Fortunately, I've never needed a seatbelt extender, but just in case, I got one right here.
Absolutely. Dr. Jim, that's incredible, man, because it's really a testament to how dangerous it was during World War II, out of combat. The airplanes that they were cranking out on the assembly lines then were, I can't remember the exact statistic, but I think we lost more pilots in non-combat sorties than combat, I believe, because that's just a testament to how dangerous it was during that time. That's incredible.
Well, if you look closely at any of those warbirds, the thickness of the skin on them, those things were tin cans.
Yeah. Absolutely. Yeah, they had to crank them off the assembly line to just push them forward, which is pretty wild.
Yeah, that is incredible aviation history. Wow. So are you kind of an aviation buff a little bit there? I mean, the history is fascinating. Or World War II.
Oh, just a little bit. I always wanted to be a pilot when I grew up. Yeah. But I realized that with 20/800 vision, I probably was never going to pass the medical for the airline transport rating, and moved on to other stuff.
There you go. Yeah. Good. And that's probably why you passed Andy in the investments course. You were Andy's professor.
That's right.
He got a pass because he was a pilot. I'm assuming that's got to be it.
It's the only way.
No, he passed because he earned it.
He's kind of a smart dude. That's for sure.
That's great. And Dr. Jim, you've traveled a little bit as well. I think your bio, you've been to 75 different stock exchanges. I know when we were doing our global consulting project at Georgetown's Masters in Finance program, we were over in Namibia. But how did you get into that? How do those travels take you kind of all the different places? And I guess, what's your favorite stock exchange?
The next one is my favorite one. My mission in life is to visit every stock exchange in the world. And I love to travel. And as a professor, I get invited to conferences, or I get to take students places like Namibia. And so if there's a stock exchange within 100 miles, I will find a way to get there. Wow. I'm very lucky. I made 1K on United this year, and I just love to travel. Nice. Love to fly.
Any idea how many stock exchanges there are? I mean, I've never even thought about that.
Well, it depends on how you measure them. I count them based on whether they have a license from the government to trade stocks or futures. And by that measure, there are probably about 300 in the world.
Oh, wow.
And new ones keep popping up every day, too.
Yeah, that's even more than I thought. That's incredible.
It's super interesting. Yeah, it makes you think about how do you, if I'm a U.S. investor, I want to go buy some emerging market stock. It's like, how do the plumbing and all of that that works. We leave that to the money managers and the institutional guys, but it's a fascinating topic.
It is fascinating, and the plumbing really is my specialty.
Yes.
I love to study the nuts and bolts details of how financial markets work. And when people start asking me about them out of politeness, and I start going into detail, they suddenly remember that their dentist is having a sale on root canals, and they run screaming from the room.
Well, I would imagine the hardest part, and I think we're going to experience this today during this podcast, is just taking these super complex things and trying to break them down to the layperson. I mean, that's got to be challenging as well.
Well, actually, that's my special talent because I'm so simple-minded so I basically, the only way I can explain things is if I've broken it down simple enough that even I can understand it.
Oh, that's good. That's good to hear. And that's a pilot mantra as well. It's like you got to keep it simple. Otherwise, complexity is not what you want, especially flying an airplane as well. So that's good to hear.
Yeah. Well, that's awesome. Maybe we'll kind of jump in. A lot in the news these days, and I when we had talked before, the oil crisis, the war in Iran, what that's doing to the energy markets, the stock market. That's all super fascinating, and I think a lot of people are thinking, hey, is this like the 1970s? We had the OPEC embargo, the original Iranian revolution. Like anytime anything happens, we try and draw parallels to the past. And I know you've put a lot of thought into that, but any sense on kind of where this goes and energy crises and how that sort of propagates through our broader economy?
Now, as an old man, I lived through those days. So they were just like yesterday when suddenly oil prices quadrupled, and what just happened? And as you well know, energy is the foundation of our economy, and especially for the airlines where fuel is one of their biggest expenses.
Yes.
So when you see fuel costs rising, that has a huge impact on the cost of running an airline. And has a huge impact on airline tickets and thus airline sales. And as the high cost of energy ripples through the economy, everybody has an income shock because suddenly, unless you're driving an electric vehicle, you see the cost of your commute going up. You see the cost of heating your home in the wintertime going up. And so when people see the cost of essentials going up, what are they going to do? They're going to cut spending on less essential items, travel. And so we can expect a ripple effect on the travel industry. Now, how big or how bad? I stay out of the forecasting game. I'm not really good at astrology or soothsaying. I like to tell my students, if I could forecast that accurately, they'd be taking classes in the Jim Angel building on the Georgetown campus. But last time I checked, I was not teaching in the Angel building on campus. So that should tell you about my forecasting ability. But we do know that when energy prices skyrocket, there's a huge impact on the economy. That we can expect people to be cutting back on other items. And that's going to be painful as it ripples through the economy.
Yeah. Do you think, a lot of time, well, we've kind of, maybe not the right word. I think we have become in the U.S. energy independent-ish. We're a net exporter, I think. So a person like me, layperson, sees those headlines and we think, hey, we're good to go. I'm knowing that's not the case, especially since it's a global economy. But how is it different versus, when we experienced this the first time back in the 70s?
All right. Well, you hit the nail right on the head. We are independent-ish, and it's a global market. So we're not independent of global prices. And what happened in the 70s, we're a net importer. And then the fracking revolution arrived. Now, what fracking basically is what you do is, when your shampoo bottle is almost out of shampoo and you put a little bit more water in it and you shake it up to get the last bit out. That's what fracking is. It was a technological advance which said, we can inject stuff into the ground and get a little more oil out of the ground. That has bought us time. How much time is a matter of debate. But the reality is there's a finite amount of oil in the ground. And most of the oil we know about on this planet is in places that don't like us. So unless we break our dependence on oil, we are going to be caught up in Russia, caught up in Venezuela, caught up in the Middle East, caught up in places that, shall we say, have some issues.
Mm-hmm.
Yeah. Yeah. So you'd say it's more of a demand consideration than it is really supply. In other words, U.S. demand for oil is more of our primary constraint there.
And it is, as you pointed out, a global market. So even if we never imported a single barrel, the fact that, world price has gone up, means our prices are going to go up. We are locked into the global economy, whether we like it or not.
Yeah. Mm-hmm. Yeah. I feel like the buzzword this year is going to be stagflation. That's where it's like we haven't heard that in a while, but maybe for our listeners, kind of what that is. And then, if you think that this kind of environment, breeds, maybe isn't the right way to put it, but sort of breeds that kind of economic environment.
Again, as the old guy who has been there, done that, I remember stagflation. So as an economist, let's talk about what led up to that. We had a very weak divided government that was beset with scandals, like the Watergate scandal. Mm-hmm. We had just lost a nasty war in Vietnam, and there was a lack of trust in institutions following the Watergate scandal. Now, what do weak governments do? They print money. Now, we euphemistically call that lowering interest rates. But the way the Fed lowers interest rates is they print more money and they dump it on the economy. That's how they do that. Now, of course, if you say print money, any fourth grader knows, isn't that going to cause inflation? Well, yes, if you print too much, it does. So let's think about what happened in 2020. The first Trump administration was calling on Chair Powell of the Federal Reserve to lower interest rates. And as part of the pandemic panic, Chair Powell certainly did. Yeah. And he allowed the M2 money supply to grow by 25%. Now, after the pandemic passed, did they take that money out of circulation? No. The money supply kept going up. And is it any surprise that the cost of living now is 25% higher than it was in 2020? No. If you print too much money, you get inflation. So in a current situation where we have a government running huge financial deficits, definitely political polarization, definitely loss of trust in institutions, and a president who is saying, print more money.
Sounds familiar.
The last time he said that, it set off a 25% spike in the cost of living. Yeah. And so there are a lot of people who think if you do the same thing over and over again and expect different results, that's called insanity. So if you print too much money now and expect anything other than inflation, I call that fiscal insanity. So so there are good reasons to fear stagflation right now.
Yeah.
Now, exactly what is going to happen? How much money will the Fed print? It remains to be seen. Yeah. Again, I stay out of the forecasting business. But there are a lot of good reasons why inflation is not dead. There are the short-term things about how much money is the Fed creating. They need to create the right amount for the economy, not too much and not too little. So they're always between a rock and a hard place. But there are other things which are driving up the real cost of living beyond the monetary side. For one thing, we have deglobalization going on. After the end of the Cold War, we all, myself included, well, maybe not all, but a lot of us thought, wow, we are in a world of living happily ever after. The Cold War is over. We will have a world of free trade where we all concentrate on our comparative advantage. We can source anything from the lowest cost producer on the planet, and we all benefit from gains from trade. The economics are compelling on that one. If we did live in a world of peace, we would live in a world of prosperity. But what I and many others didn't realize is there's always somebody who wants to put the great after their name. In other words, they want to be a warlord who assembles an empire. And when we suddenly realize that, Uncle Xi in China is making all these warlike noises. And then our friend Vladimir in Russia is invading neighboring countries and taking them over. So the globalization dream is dead. And now we're in an era of regionalization, of deglobalization. Common sense says, if you're not buying everything from the cheapest vendor, it's going to be more expensive. That's pushing the prices up. Second thing, demographics. As a planet, we are getting older. Now, I got nothing against old people. I want to become one someday. Some people think my kids think I already am.
Yeah.
But I'm still in denial on that one.
Yeah.
But let's face it, old people who've left the workforce are no longer producing goods and services, but they're still demanding them. Supply goes down, demand goes up, price goes up.
Yeah.
So the shortfall facing Social Security is just one of the problems that we're facing. But with too few workers, too many retirees, that means more demand for goods and services, fewer people supplying them, higher prices. We've got those forces that are pushing prices up, even if the government were following sane policies, which they're not. Huge tax cuts leading to ever bigger deficits. We had a balanced budget 25 years ago.
Yeah.
We were worried about a lack of government securities that people would use.
Yeah.
And now we've had a generation of boomers. We can blame everything on the boomers, right?
That's right. Yeah.
Who basically have maxed out the U.S.'s Visa card.
Dr. Jim, I think it's a fascinating example, what you just said on the complexity of what we're dealing with. Because a lot of times I know that I personally go, President wants the Fed to lower rates, and lower rates equal A plus B equals C. 1 plus 1 equals 2. And it's just so much more complex. And the unintended or consequences, if you will, are just incredibly challenging. And like I said, you can see now why the Fed is resistant to lower rates because of all the things you just said. I mean, and it's just way more complicated than any one person could ever decipher from the news and the media, YouTube, wherever they're getting their information. So it's incredibly complex.
And I blame the media partly. We can always blame the media, right? Because we talk so euphemistically about lowering rates when really what our dear president is requesting, print more money. And if you say print more money, then everybody knows what's going on. But since nobody really wants to talk about what's going on, we use these euphemisms like lowering rates to really disguise what's going on. So I wish everybody would actually be honest and say, our president wants the Fed to print lots of funny money.
Yeah. That's it'll be interesting. I know we've got a lot of Federal Reserve drama going on as well, so that'll be fun to watch in the news. But maybe I'll pivot. I think maybe we can jump in a little bit to maybe the meat of the matter, if you will. So. Stable coins, we didn't even know what stable coins were. I'll speak for myself, actually. A year ago, and I'm sure, and they've been in the lexicon for a while, but you've done a lot of work on, Dr. Jim, on Bitcoin, cryptocurrency. And so it seems like people kind of get, to the extent that you ever can, get Bitcoin and they get crypto, but there seems to be this emergence of these stable coins that are pegged to the dollar, and that's going to be really good for investors. But I know you've done a lot of work on this, but maybe for our listeners, like, what is a stable coin? Just kind of layman's terms. And if you hear someone talk about hey, you should be in stable coin, what are some big things we should be thinking about in that kind of an environment?
A stable coin is just a convenient way to hold a dollar. Now, you can hold your dollars in a bunch of different ways. You can have a physical piece of paper.
Nice.
Most of us don't. Most of us keep our money in a bank. Now, is the bank sitting on pieces of paper? No. The money we have in the bank is really just an entry in their database and their ledger. There are other ways that you can hold dollars, and a stable coin is a way to hold a dollar in crypto form. Now, in crypto form, it means that you have this digital asset, which basically means you have a secret number. As long as you keep that secret number, your so-called private key, as long as you keep it safe, you're the only one who can spend it. But the advantage of that is you can transfer it to anybody you want around the clock, around the world. You don't have to wait for the banks to open. And that can be a real convenient thing to do.
Yeah.
So these started in the crypto space where people looked at the existing crypto assets and they said, wow, these things are really unstable. And they are. But if you want a short-term store of value, well, the US dollar is pretty good. Yes, it may be melting at a rate of 3% per year, but that's pretty slow. That being able to keep assets in this digital form that you can basically transfer person to person around the clock, around the world, and you can do fun things with it. Wow, that's really cool.
Yeah.
And this is why there are now literally hundreds of billions of dollars worth of US pegged stable coins out there. Now, there are a lot of different types of stable coins. Some of them are by companies that actually are holding things like US Treasury bills and US-backed bank accounts as assets. They're pocketing the interest on that, and it's great business to be in. You give me $1, I give you this stable coin, and whenever you want, you can come back to me and say, give me the $1, and I'll say, fine. But in the meantime, I'm getting the interest on that. Yes, so great business to be in. Lots of entities trying to get into it. Now, there are some issuers of stable coins, which they claim to have assets, but you're not really sure how much they have or where they are. And there's some other issuers of stable coins, which are basically aren't really backed by anything, but they'll say, oh, if you want your $1 back, sure, we'll give it to you, and we'll just sell more crypto coins that we just manufactured to make up for it. There are various different types out there. Now, recently, the U.S. Congress passed a thing called the Genius Act.
Yeah.
And don't ask me what the acronym stands for.
It is an acronym, right? I know.
Yes.
Everything has to be an acronym. Yeah.
It is.
Somebody on Capitol Hill is really good at coming up with funny acronyms.
That's their job. Yeah.
But I figure it takes a stable genius to come up with what Congress came up with, because they came up with a scheme to regulate stablecoins, because you want to make sure they're safe, right? That they're backed by real assets and not funny crypto magic beanies. But they couldn't really figure out who would regulate it. So our U.S. Congress decided to give any issuer of stablecoin the choice of not one, not two, not three, but 55 different regulators in the United States. You can choose from a handful of federal regulators. You can choose from any of the state regulators.
Okay. Yeah.
What could possibly go wrong?
Yeah.
Yes. But basically, a lot of people are excited about stablecoins because they're basically opening up a new payment rail. So if you think about it, so let's suppose I want to pay you some money. I could just hand you a $1 bill, but you're not in the same room, so that's hard. I could get out my phone and do you take Zelle? Do you take Venmo? Do you take PayPal? Do you take Cash App? Whatever. Or I could hand you a paper check. I could send you a Fed wire.
Yeah.
There are a bunch of different things I could do. And again, the nice thing about the stable coins is I can do it electronically around the clock, around the world, without having to wait for the banks to open. Now, that's really cool. And so a lot of people are going, wow, we have a new way to pay. So if you think about the times you walk into a store and you see, they have 25 different logos of all the different payment forms they accept.
Yeah.
So this is just sort of another rail that some people think are going to be really useful.
Yeah.
But as far as an investment goes, there's just a way to hold $1.
Yeah.
So it's not like, wow, I'm going to get rich quick and fund my retirement on stable coins.
Stablecoin.
No, that's not going to happen.
So if you had, your emergency fund, right? We say 3 to 6 months, you could put it in a money market fund, stable coin. What would you tell someone who asked you like, hey, and I guess the first question would be what return, right? And my understanding is you talk stable coin is there's some I'll call it funny business maybe in terms of getting returns on these. They're not truly allowed, but maybe somehow it's happening.
That is a great question because if you hold your money as a paper dollar, the government does not pay interest on a Federal Reserve note. And you'll notice that when you look at the script that we use for money in this country, it says right at the top, Federal Reserve note. So this stuff is created by the Fed. And as I said, it does not pay interest on it. Now, if I loan it to a bank, and when you deposit money in a bank, you are loaning the bank money. Sometimes they pay you interest. Sometimes they don't. They try not to pay you any if they could get away with it. Now, in the Genius Act, the banking lobby basically got Congress to say, you may not pay interest on stable coins. I After all, they don't have to pay interest. They don't have to compete with these things. And so now there's a political battle because the stablecoin issuers have basically found ways around it. So since most of us really don't want to be messing with our private keys, most of us depend on some intermediary to hold our crypto for us. And we keep it at an account like a Coinbase or a Kraken or one of those people. And wow, the stablecoin issuers will go to them and say, oh, we'll pay you a bonus based on, how much assets you have under management with us, and if you pass some of that on to your customers, that's fine. If you want to do this sort of staking where you basically lend it, you get some interest. Okay. So just like I can deposit this in a bank and maybe earn interest, or better yet, a money market fund, which is a mutual fund which passes through all of its interest. I love money market mutual funds. They're great. So and that's my basic, if you want to say where to stash your emergency fund and earn the most interest without having to worry about rolling it over with CDs or any of that, I go with a money market mutual fund. Yeah. Not the money market account at the bank. Those guys will pay as little as they can get away with. But you want the money market mutual fund, which is the one that they're designed to pass through all of the interest they earn. All right. Yeah. Now, what you can do with some crypto is you can do things called staking, which is basically super high risk investing, in which you may basically lend your stable coin to somebody else. You stake it, and you can stake a number of crypto assets, and then they do something with it. And I don't think we have time to go into all the cool and groovy things that people may be doing with it. But when you see people promising like really high returns and high yields, there is really high risk.
Interesting.
Because right now on money market mutual funds, you're lucky to get 3-something%. That's the risk-free rate that you can access. If somebody is offering you 6, 7, 8, 9%, there's risk involved. And if you can't identify exactly what that risk is, I would recommend staying away from it. Yeah. And there have been plenty of instances where people thought they had magic money machines, and over a short period of time, it looked like it really worked until it didn't, and then it blew up.
Yeah, that's a great background and introduction. I think one of the things I think about, we talked stable coins, is there's probably some risk there. This is a nascent regulatory environment. I think the other thing I've heard is, hey, this is going to increase the demand for treasuries, right? Because more people are going to buy stable coins, and that means we're going to need more treasuries. But I don't know about that one, but I'd love to get kind of your perspective on that.
This is one of the reasons why I love stable coins, because they do, demand US dollar backed treasuries.
Yeah.
Wow. Now, as US taxpayers, we make tremendous money on the global use of the dollar. The people in other countries call it the exorbitant privilege. Mm-hmm. But, one of the outcomes of World War II is we played our cards really sharply and set up the US dollar as the reserve currency of the world.
Yeah.
And that means that other countries that want to do more or less normal business transactions need dollars to do it with. And so we basically, print dollars, ship them abroad, and other countries ship us Toyotas. I mean, that is a really great deal for us.
Yeah.
Mm-hmm. Now, in order for the rest of the world to have those dollars, we have to run a trade deficit. So that's, when people go, oh my God, we're running a trade deficit. Yeah, we have to, because the US dollar is a financial service that we provide the rest of the world, backed by the full faith and credit of the US Army. Mm-hmm. So part of this was World War II, but part of it came out of the 1970s.
Yeah.
When the first oil shock hit, we basically went to our friends in the Middle East and said, nice oil wells you got there. If you basically accept dollars for oil, we'll protect your oil rigs. And this is why our men and women are in harm's way, sitting in the Middle East, trying to bat away Iranian missiles.
Sure.
Because we're out there protecting the global oil resources, because it's a global market, and we all see what's happening right now.
Yeah.
Dr. Jim, it's fascinating. This, we talked about the Genius Act earlier, and then the stable coin. And so I did happen to do in my reading, preparing for this, I did happen to see a little blurb, it seemed like, where that was probably the motivation for the Genius Act, was to continue the strength of the dollar, the world reserve currency, to make the T-bills a little more in high demand. Is that all? That's kind of what you've kind of alluded to and said, right? Is that the
absolutely. Again,
yeah.
The U.S. dollar is a financial service that we provide the rest of the world. Mm-hmm. U.S. Treasury bonds are a financial store of value that we provide the rest of the world. That the U.S. has never canceled its currency. Mm-hmm. Other places like India, they do it regularly by tradition. So a greenback that was issued back in the 19th or 18th century is still valid currency. Mm-hmm. Yeah. That is a valuable franchise, and if we screw it up, we, the U.S. taxpayers, are going to lose big time. Yeah. Now, any business has to stay technically up to date. All right. So if we want the dollar to continue to be the world's reserve asset, well, we've got to make it easy for people to use it. Pieces of paper are archaic. They still have their uses, but with this new rail opening up, we want to make sure the whole world can use it. Mm-hmm. And so it's actually, this extraterritorial use of the US dollar is great. We benefit from that. And one of the reasons why Congress passed the Genius Act was to provide a regulatory scheme so people could actually issue stable coins and enhance the role of the dollar.
Excellent. And a lot of our listeners will talk about, and they're maybe even worried about, probably because of news and media and things, but the strength of the yuan and the risk of the U.S. dollar not being the reserve currency. Mm-hmm. And you talked about India canceling their currencies multiple times. What about China and that, quote unquote, threat to the U.S. reserve currency? Is there more to that? Is there more significant? Is it more serious?
Well, this is all part of the geopolitics and the deglobalization that is occurring. Now, you'll notice one thing the United States did was we pulled the sanction card against Russia because of their aggression in Ukraine. The rest of the world sees this and they go, wait a minute, we've got this global monetary system dominated by the United States. Now, can we always trust the United States to be friendly with us? Given the chaos going on now, that's not clearly the case. Mm-hmm. So people are going, we need an alternative. And the folks in Europe would love the euro to become a real reserve currency. It's on its way to doing that. The folks in China are also looking at what they would call U.S. hegemony. And they're going, wait a minute, we can play this game too. We are a world power. We have a very powerful economy. So why don't we enter the global reserve currency business? Now, how far they want to push that remains to be seen. But they don't want to be dependent on the dollar. Mm-hmm. Because if Mr. Xi wants to call himself Xi the Great or Emperor Xi and start invading neighboring countries, that's going to cause basically serious repercussions for their use of the dollar. Mm-hmm. So you'll notice China has been steadily drawing down their stockpile of U.S. Treasury bonds. Yeah. A few years ago, they were the biggest holder of Treasury bonds. Mm. Now they aren't. And so we're looking for customers to basically replace the Chinese on that front.
I think that worries people. It seems like people say regularly, well, we owe the Chinese so much. They could cash in their Treasury bills, and I don't even have a full enough understanding to ask the question properly. But, these are things we hear out there that are kind of propagate the fears of the reserve currency argument. But
it's a function of the fact that we're maxing out our Visa card, that the U.S. national debt relative to our GDP, our national domestic product, what we basically earn every year, is at the highest it's been since World War II. And so it's like going from having a credit card with no balance on it to now one where you're pretty close to maxing it out. Yeah. And that limits our economic flexibility to deal with the next war, the next pandemic, the next global recession. It means that, our hands are very close to being tied. I can't blame any country for going, Let's see, we've got a country with way too much debt. And how are they going to service that debt? They've got a president who's calling for printing lots of money. That means the value of these bonds we're buying is going to go down. Maybe we should put the money someplace else. And that's why China bought a bunch of gold instead of dollars and doubled the price of gold.
Yeah. Yeah. That's super interesting. I think we see gold, and it sounds like last year it was reserve banks buying gold. And now we've got this current crisis, and the gold has actually kind of gone down in value, which has maybe shocked some people. Like, hey, we're in this potential inflationary environment. Gold is going down right now, which is pretty fascinating.
Gold is a commodity, and it follows a commodity price cycle. And you see this with all commodities, including oil, gold, that you have periods where prices are high, and people go, wow, let's take that old silver that's rotting in the basement and sell it. Let's open up a new mine. Let's stop using this for other stuff. And when the new mines get opened and the new supply comes out, whoops, prices go down and stay down for a long time. We see this with the oil price cycle. The prices go up, then suddenly people start fracking the old wells, they start developing new ones, but it takes time for all that supply to come online. And in the meantime, people see higher prices and they go, wow, the most patriotic thing I can do is drive an electric car so that we're not stuck in these messes in the Middle East. But the old gas car is still running, so I'm going to wait until that dies until you get the electric car. So it takes time for the conservation to kick in, for the new supply to kick in. But when it finally does kick in, now you have a glut, prices go down, people forget the patriotism of buying the electric car, and they buy a big monster SUV.
There you go.
And the cycle repeats because when prices go down, nobody drills any new wells, the supply dries up, because your average fracked well only lasts about 18 months before production falls off. So you got to keep drilling to get more oil out of the ground until it runs out. So because of these commodity price cycles, they affect not just oil, but they also affect gold and silver as well.
Yeah, interesting. These are all, it's so fascinating that we've started with stablecoin, talked about that, talked with the Genius Act, but they're all related. And that's what I'm learning, right now is that, hey, the reason we're talking about all these things, because they are integrated and they are impacted on each other and they're related. One of the things that I'm fascinated with, though, is, back to the stablecoin issue of, I love your comparison about the new rail and the new way of making payments globally at any time. Quite frankly, I didn't know that was even a need or demand. Again, in my little world that I live in, I just had no idea. The other thing, and Dr. Jim, if you could comment on the significance of that in a minute, this new capability, this new rail, what are the implications of that? The other part of that I read in our preparation was that I think stable coins and maybe the related cryptocurrency would allow people that are not able to use banks or we have a name for it, I think the unbanked or
the unbanked, yeah.
Yeah, and so it might allow them to come in and participate, which sounds great. But in my mind, I'm thinking, this stuff is really complicated. If I'm not even using a bank today, how in the world am I going to all of a sudden become a stable coin user? So those are things I think about as I read up on this a little bit.
Yeah. Well, we just try to make it sound complicated. If you're the kind of guy who can master all the switches in a jet airliner, you're more than smart enough to understand how to make a payment. So now, but you raise a very good point in that here in the U.S., our payment system, it's kind of slow and creaky at times, but most of the time it works pretty well. So if you want to pay me something, you just, Venmo, Zelle, whatever, done. But what if you're sending money back to family in a different country? Ooh, this is where it gets expensive, it gets slow, it gets painful. So for everyday usage, it's probably going to be a very, very long time before you walk into a supermarket and next to the 25 different payment card logos they have there, one for, yes, you can take this stable coin. That's probably not going to happen anytime soon.
Yeah.
But If you're a business and you want to move money to a foreign subsidiary to pay for some imports, if you are a migrant worker trying to feed your family back home in some country where there's a really good reason there were no jobs there, well, for that reason, that's where things like stablecoins can be a major advantage. Now, in order to use them, you have to have the software on your smartphone that can basically do it. So you need an app. And the person on the other side needs a similar app, does not have to be the same one. And once you do that, you can just take the money, tap, bing, and transfer it to whomever you want to transfer it to. And, so that's the simplicity of it. Now, of course, the person on the other end has to get the money out of the app. In the US, it's fairly easy. You link it to a bank account and you can easily put money in or out of your Coinbase account, not a problem. Now, can the person in that developing country that may not even have a smartphone use it? That remains to be seen. But the people are pretty resourceful and they generally figure things out.
Yeah. And I imagine this would be some of those hyperinflationary environments there's some high use cases here where you can just continue to you transact outside of the local currency because it's going up so much. I'm sure there's nuance there, right? In terms of, those businesses have to then transact in that stable coin as well to even, implement that.
Yeah, and you're absolutely right that, in countries where the local currency is very unstable and they have very high rates of inflation, many of them have effectively dollarized already. And a stablecoin is just another way to cement the international use of the dollar. So this is why we love them here in the U.S.
Okay.
Yeah. So do you see, to Andy's point, that was one great example, hyperinflation and, somewhere around the world. Jim, do you see other kind of game-changing impacts of this new rail to make these payments anytime, anywhere?
Quite frankly, I think it's mostly plumbing.
Yeah.
That most people don't really want to think about the plumbing infrastructure. They have to pay a bill. They just want to make sure that their money isn't being stolen in the process, that it's not too much time and trouble to actually make the payment. So the fact that we have a new rail that in some circumstances might be more convenient than other rails is great. But at the end of the day, it's basically plumbing.
Yeah. Yeah, well, that's fascinating.
Maybe we'll
but there's more. That the same technology that gives us stable coins can also allow us to do a lot of things that we really couldn't do well before. And this is where tokenization comes in.
That was exactly where I was going with this. Yeah.
Oh, great. Okay.
Yeah, we're mind melded on that.
First of all, let me talk about, what is a token? We've been tokenizing assets for over 400 years in the world. A paper stock certificate is just a token of value. It shows you own something. And you can record ownership in all kinds of different ways. You can record ownership on a paper database. You can record ownership on a centralized computer database. You can record ownership on a spreadsheet, or you can record it on a thing we call a distributed ledger. And that's what the crypto people invented. It's a way to record ownership in a very secure way. Because we talk about a blockchain. A blockchain database is basically just a database, a way to store stuff, which has some really cool properties that make it a really secure database. And one that makes it easy for people to transfer stuff person to person without having to go through a central institution like a bank. In other words, they replace the trust in the bank with the trust in the software protocol. And if everybody trusts the protocol, then it works. If they don't, then it doesn't. So it's really a different kind of trust.
Yeah. I think, for our clients, it's like they deposit cash, we go buy ETF, we have a thing called T+1 settlement, and then it's it doesn't actually settle until the very next day. I imagine this tokenization sort of gets inside of that loop and speeds it up, if you will.
Again, it's the plumbing. And you can, if you want, do what they call atomic settlement, which basically means, instant settlement. Yeah. But for most of the time when you buy or sell a stock, it doesn't matter. Because in the US, you can buy a stock at 10:01 and sell it at 10:02, not a problem. The fact that both trades technically settle the next day, that now if you sell the stock today and you need the money now, maybe your broker will lend it to you. Sometimes they do.
Yeah.
But most people have enough credit floating around that they can cover something for 24 hours. Mm-hmm. Or at least put off the creditor for 24 hours. So the fact that you can get faster settlement is not really like, wow, man, when I go and speculate on Tesla stock, I need to settle now. No. Where tokenization comes in is, again, it's a new rail. So it's a new way of holding stock. You can hold stock as a paper stock certificate. You can hold it at your broker. Or instead of holding the paper certificate, you can actually have a token that represents the ownership. Now, why would you want to do that? Most people in the US probably would not want to bother. But for people who don't have access to US brokerage firms, they may want to take advantage of that new rail. But I don't see that as big a deal as for common stocks. That works pretty well already. Yeah, it's a little slow and clunky at times, but that functions pretty well.
Yeah.
It's in the pain points, and it's in the area of not old-fashioned stocks and bonds, but the fact is these crypto assets, these digital assets are programmable. So think about programmable money. Think about sending your kids college money that they can spend on food and books, but not alcohol.
Oh, interesting.
Or think about an option that exercises itself if it's in the money. Think about an asset-backed security where you take a bunch of mortgages and you stick them in a pool, and then you slice the pool up and in a lot of different ways. That's the fun stuff we do in this business. But imagine if all that plumbing just automatically executed itself. That programmability is what makes nerds like me go, wow, way cool, man.
That's awesome.
But just because something's a token doesn't necessarily mean, it's a new great investment. There are plenty of scam artists out there who've dumped plenty of crypto shit on the market. And most of those tokens are basically worthless.
Yeah.
We have a technical phrase for them. We call them shit coins.
Sounds familiar. That's the best name I've ever heard. I love it.
Yeah.
So as an investor, you have to be really careful and say, what is this thing? Okay, what rights does it give me? Now, one of the things about holding crypto assets is they really are what we say digital bearer assets. Physical piece of paper, dollar bill is a bearer asset. Anybody who has it in their hot little hands is deemed to be the owner. Anybody who has that secret number on a crypto can spend it. That means they are effectively the owner of that asset. So how do you make sure you're the only one who has that secret number and that somebody hasn't hacked into your phone or your PC and copied that number and gone and spent it already? So you have security risks there. So if you're going to traffic in digital assets, you need to understand the security risks. Most of us don't want to mess with that, so we let somebody else, again, like a Coinbase or a Kraken or one of those outfits, or a Robinhood, basically hold it for us. But what rights does it give me as an owner? If it's some meme coin, they very explicitly have no rights. And at the end of the day, they're going to have no value because in the short term, people, can bid the price of anything up to extreme levels just on emotion. But as Warren Buffett once said, in the short run, the market is a voting machine based on popular passions. In the long run, it's a weighing machine based on underlying value. So when you look at any token, ask yourself, what legal rights does it give me? How are those legal rights protected? If whatever value I'm going to get gets misappropriated by somebody, what recourse do I have? Who is protecting me, if anybody? And Congress is still arguing about, which federal bureaucrat gets to regulate what. There's a big fight going on in Washington now over the Clarity Act, mainly because the Senate Banking Committee regulates securities. The Senate Agriculture Committee regulates the Commodity Futures Trading Commission, which does futures. And neither committee really wants to give up any power to the other. And so they battle back and forth. Yes. Yeah. This is one of the reasons why we have well over 100 regulatory agencies in the United States at the state and federal level, and they don't play nicely with each other.
That's fascinating. Andy, I'm going to jump in selfishly, and I know you're going to, we're getting short on, Dr. Jim's time, but I'm dying to know, you have co-patents on 12 fintech items. I don't know if any of those things are interesting or you could share. And, to continue on your point there, you don't have to disclose if you don't want to, but I was curious if you were kind of a pro investor of crypto, just investing in an ETF or Ethereum or whatever it might be. But those are my two final things that I'm selfishly curious about.
Okay, I'll answer the second question first. I've been a bit skeptic since the beginning. Mm-hmm. When Bitcoin came out, I kept asking the question of, okay, what am I actually going to do with this thing? And I knew too much monetary history to realize that an inflexible monetary standard always blew up. Nobody could stick with it. And also I knew what governments generally did to people who tried to compete with their money printing franchises. So I missed the opportunity to be an original gangster and become a Bitcoin billionaire. So so I've only bought enough cryptos to just play with them to make sure I understand how the plumbing actually works. Mm-hmm. But I missed out on that boat. Now, as far as my patents go, there are a family of patents, and what they're basically designed to do is to do inside computers what the humans used to do on the floor of the New York Stock Exchange. And this gets into the plumbing of how stock exchanges work. If you're not careful, I could go into a big, long debate for hours on this. But let me just say it's, they're all sort of interrelated. And basically, try to get computers to actually use the information in trades to find the other side of the trade. Because the existing electronic markets wait for the orders to come in. You want to buy a stock, you put in an order, say, I want to buy. Somebody else puts in an order, says, I want to sell. The computers match those very efficiently. But not everybody who may be interested in buying or selling actually has already put in an order. Maybe they're waiting. Maybe that they're taking a big order and breaking it up into little orders. So the idea behind the patents is to look at people who are trading and recognize a pattern and say, oh, look, somebody there looks like they've been a big buyer this week. Maybe they want to buy some more. So when another seller comes in and says, I want to buy a big block, you send a message only to the guy who's been selling, only to the guy who's been buying, and say, Psst, I see you've been buying this week. I got a guy here who might want to sell. Would you like to talk to him? So that's the basic idea. Wow. And unfortunately, it never went anywhere. NASDAQ actually tried to launch a system based on it back in 2004, and it flopped. So other than the bragging rights of, well, man, I've got these patents, they certainly did not make me independently wealthy.
Oh, that's incredible, though. That's fascinating. And nonetheless, thanks for sharing that, Dr. Jim. I appreciate it. Andy, I'm going to hand it off to you, sir. It's been a privilege, Dr. Jim. It's been awesome.
Absolutely. Yeah, and I'll reiterate what Charlie said. We've enjoyed having you, Dr. Jim. It's been great to see you. And we touched a lot of different things today, and we appreciate your expertise. And I think, as Charlie said, it's all related. It's hard to isolate any one part of the economy, any one part of the markets. And I think it's important to have that perspective. And we're excited to see stable coins. They're not in our portfolio yet. We're, the future and where that goes. But again, thank you so much for your time. And we appreciate having you on the show today.
Hello, Pilot Podcast family. Charlie here. I just wanted to share with you something we've just recently developed. In the show notes, you're going to see the Pilot Wealth Index. We want you to check it out, give it a shot. It's a quiz, a short questionnaire that allows you to understand, are you on track? We have a lot of people that say, hey, we just want to know if we're on track. Are we where we should be at this stage of our flying career, airline career, whatever it might be? How am I doing? Am I close to my peer group? Am I behind? Am I ahead? We've developed some questions, some metrics that we think if you go through this and check it out, answer the questions, you will have a very good idea of where you stand. We develop the questions that give an indication of, are you doing the right things you need to do to be prepared for an eventual retirement, and that one that can be profitable for you. So check it out in the show notes, the Leading Edge Pilot Wealth Index. We hope you give it a shot. If you have any questions at all, reach out. Happy to help. Charlie@leadingedgeplanning.com. Again, that's Charlie@leadingedgeplanning.com. You can call or text me on my cell, 865-328-4969. Thank you very much.
Thank you for listening to the Pilot Money Guys podcast. Please subscribe, rate, and review on iTunes or wherever you listen. We are grateful for your reviews because they encourage others to listen in. Visit leadingedgeplanning.com to learn more and subscribe to our newsletter. Leading Edge Financial Planning, LLC, LEFP, is a registered investment advisor. Advisory services are only offered to clients or prospective clients where LEFP and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.